Good morning, and thank you. In this month's report, we cut our demand forecast for China, and that's the major change. The lockdowns that we're seeing in Shanghai spreading to Beijing are more extensive than we had assumed last month. So the majority of the change is coming in really in the near term to Chinese demand for May and into June. And we also slightly reduced our outlook for the U.S. for the remainder of the year as higher fuel prices are expected to curb driving demand in the United States. So, but most of all, the demand forecast is largely unchanged since last month's report. We had already factored in the slowing economic growth, higher prices. So we're expecting growth of 1.9 million barrels a day for the year as a whole.
So a lot of the change already anticipated last month. In terms of the impact of the Chinese lockdowns, what are you anticipating? What are you seeing already, perhaps, in terms of the impact on neighboring countries and shipping networks?
So we're seeing that supply chains are disrupted. We're seeing shipping congestions outside of China. It is having an impact on industrial activity both in China and in neighboring countries. And trade coming out of Chinese port has slowed. So it is having a major impact. And as I just said, the lockdowns are more prolonged than we had anticipated. We do expect the restrictions to ease in coming months into May and June and into the summer. And as the restriction ease, demand picks up for driving in Europe and in the United States. We're expecting demand to accelerate. So April is the low point in demand, the seasonal low point that is exacerbated by the lockdowns in China. But we're expecting oil demand growth to accelerate by almost 4 million barrels a day from now to August. So there's a strong seasonal ramp up in demand in the coming months. And we're expecting refinery runs to increase as well to keep pace with this.
What kind of behavioral changes have you observed outside of China from both the industrial consumers of energy and also individuals in response to higher prices?
We are seeing, of course, the global economy is still recovering from COVID. So we're seeing a strong demand, pent-up demand for travel, for aviation is picking up. Driving, gasoline demand is strong, but we are seeing that the higher prices, we have record prices for gasoline in many of our consuming countries, not just in the developed world, but in emerging countries. So that is having an impact on demand. Also from the industrial sector, we're seeing that the high gas prices, natural gas prices, had led to switching into oil for many industrial consumers. But now that with diesel and gas oil prices at record high, some of that impetus is falling away, and we're seeing a switch back to gas in some of the consumers.